Reciban un cordial saludo. Soy Carlos Giraldo.
I welcome you all. I'm Carlos Giraldo, Chief Economist at FLAR, the Latin American Research Fund. I would like to warmly welcome you all to the CAF and FLAR co-sponsored meeting about COVID-19 and financial stability in Latin America, as central bank technicians' views. Once again, as it happened over the past 10 years and a half, we have brought together our efforts in order to promote these kind of dialogue forums. I would like to now turn to Mr. Jose Dario Uribe, Executive President of FLAR, in order to make some opening remarks. Good afternoon. I would like to warmly welcome you all authorities and technicians representing central banks, ministries of finance and treasuries in Latin America and the Caribbean, as well as representatives of international organizations, think tanks, representatives, scholars, and other private stakeholders. Once again, as Carlos Giraldo has just said, the CAF and FLAR have brought together our efforts in order to promote technical dialogue fora just like this one. We promote dialogue spaces like this in order to promote the implementation of public policies that can safeguard macroeconomic stability and financial stability across the region. The outcomes of COVID-19 in Latin America and the Caribbean have been quite deep in terms of infections. We have surpassed 13 million infected people, and in terms of death toll, we are the second region in the world with more than 450,000 deaths. From an economic and financial standpoint, Latin America and the Caribbean is the emerging market with the hardest drop in economic activity in 2020. So this has required the allocation of tax resources in order to strengthen the capacity of the health systems in order to support the different households. So monetary and financial policies have been accompanied by some tax exemptions and have been implemented based on the characteristics of each economy. All these measures pursued different goals. For example, keeping the good performance of the payment system while stabilizing financial markets, all the way to providing some relief to households and companies, as well as boosting credit into the economy. So monetary and financial institutions have played a key role in those countries whose central bank representatives are attending this meeting: the Central Bank of Chile, the Bank of the Republic, the Mexican Bank, and the Bank of the Reserve of Peru. All these central banks not only share the same goals, but they also support their decisions based on the advice provided by the financial stability divisions in their organizations. So to date, all the monetary and financial measures that have been adopted have made it possible to keep the financial stability and the stability of the payment system across the region. However, the challenges posed by this financial stability are huge, both in the short and in the medium term, given the fact that there's still plenty of uncertainty as to how the shock caused by COVID will continue to unfold and how long it will take before we can go back to normal in terms of the economy. We consider, therefore, that this dialogue space is important in order to share experiences and our perspective as to the COVID-19 shock from the perspective of central bank technicians, especially with regards to the financial effects of COVID-19 and the key policy measures that have been taken in order to address such fallouts, as well as financial measures and their integration with other policies, and also the challenges we face ahead. I have no doubt whatsoever that this will be a very useful dialogue for this region. I would like to thank you again for attending this session. So once again, welcome to this virtual webinar. Thank you, Mr. Executive President, for your opening remarks. Next, Ariana Arriaza, the Macroeconomic Studies Director at CAF, and myself will be moderating this panel. Let me provide you with some background information. First of all, we have Solange Belstein. She is a Director of the Financial Policy Division at the Central Bank of Chile since April 2017. She was a key specialist at the Social Security Unit of the Inter-American Development Bank regarding labor markets. She also served as Chile's Superintendent of Pension Funds. She was also Head of Research at the Superintendence of Pension Funds and a Senior Economist at the Central Bank of Chile. She was also a teacher at the University of Chile and the Pontifical Catholic University of Chile. Daniel Osorio is the Director of the Financial Stability Department at the Central Bank of Colombia since 2015. He was involved in developing stress testing models that are now being used by the Bank of the Republic, and he also worked in different research projects on regulations, monetary policies, and financial stability. He was also a professor at the Javeriana University of Bogota. We also have Martin Toad. Martin is Director of Financial Risk. He was also a senior researcher at the International Affairs Department and a financial researcher at such organization. He was also deputy manager at the Macroeconomic Research Center at the Monetary Center of Latin American Studies. And we also have Elias Minaya, who is operations manager and financial stability manager at the Federal Reserve Bank of Peru since 2018. He was an official at this bank, taking different positions. He was head of the Department of the Financial System Department. He also was in charge of capital markets and financial regulations, and he was a specialist in the department in charge of analyzing also financial aspects. So as Mr. Uribe said, the purpose of this dialogue is to share different views about the COVID-19 shock. So the main purpose is to exchange experiences, for example, as to the different measures that have been implemented, their outcomes, and how they interact with the monetary and fiscal policy, and the risks arising from financial instability going forward. We will have 3 rounds during this presentation. First, I would like to turn to Eliana Arriaza, who will be the moderator for the first round. So you have the floor. Thank you so much, Carlos. Good afternoon, everybody. It's a big honor for me to moderate this round. Central banks in the regions have taken measures that were up to the measure to the unprecedented situation we have been focusing in order to mitigate the effects of the COVID-19 shock. Good afternoon. I don't know whether you can all hear me. Yes, we can hear you, Solange. Thank you. Well, good afternoon, everybody, and thank you very much for having me and for allowing me to be on this panel. During the first round of this webinar, we will therefore touch upon the situation triggered by the pandemic and how it has affected our countries. In the specific case of Chile, I should say that the pandemic, coupled with a social crisis that occurred in late 2019, Therefore, at that time, we were already facing a relatively complex scenario in our economy with a significant drop in economic activity in October and November last year with a relatively quick rebound. Now we are faced by the drop starting in early 2020 as a result of the health crisis, but also with some quick rebound. When compared to other peers, we realize that in Chile, our economic activity dropped less compared to other countries. But when we analyze the labor market behavior, we see that the rally was slower. And no doubt, this is something that worries us. Therefore, when we analyze the financial system situation and the key risks and vulnerabilities, this report was published in November. We identified some of the key risks listed in this table, where the persistence of the COVID-19 shock and the impact at a local and global level was considered to be the key risk. But also, in order to mitigate the risks caused by the crisis, we had to analyze different policies and how risks affected companies, households. Everybody, used the assistance that was available. In the case of local developments, there were some changes in regulations. That's something that we also identified as a potential risk, even though it's true that there are certain measures that can be taken in order to redress the fallout of the crisis in the short term, but one needs to take attention to medium and long-term measures. So these vulnerability factors have to do with companies and households with lower payment capacity, and also other situations such as the role played by institutions in Chile by mitigating external impacts. Now we see that the role played by these institutions is less effective compared to the past, and the mitigation measures that were taken both globally and specifically in Chile are also listed here. When taking a look at credit and its behavior in Chile, just like in other countries in the world, it took us counter-cyclical behavior, which is atypical when there is such a drop in activity, when usually credit behaves pro-cyclically. And this is thanks to the measures that have been put in place. In Chile, on the left-hand side, the graph shows that even though it's true that consumer loans plunged quite significantly, commercial credits remained active. What's more, they were on the rise despite some recent slowdown. As a result, corporates mainly have been able to keep on operating, which is quite significant. Likewise, we also see some significant rescheduling of 1.5 million transactions with amounts above the average. When we take a look at rescheduling in the banking sector, here we also see some significant amounts in terms of rescheduling of credits. Recently, this has also slowed down, but in May and April, reschedulings reached significant amounts. On the right-hand side, we can also see the program called FOGAPE COVID in Chile. This is a state-guaranteed credit program. So we play a very important role here, because without this program, credit would have not grown as it did. There are 260,000 loans that were granted to work capital under favorable conditions. So we see a combination of state guarantees, QE, by the financial markets, and the financial regulators in Chile, and also some measures by the Central Bank of Chile providing liquidity through some liquidity programs under favorable conditions, that has also contributed to allowing this scenario, therefore providing some relief to companies and households by reactivating credits. But we see that one of the key risks we have spotted is a slower recovery. So now we have to see how policies have contributed to people's well-being. This graph shows the policies that provide liquidity facilities, therefore building a bridge in order to provide sufficient liquidity in order to go through an interim crisis. This is also contained in the IMF report. They talk about a hanging bridge in that report. This is depicted in this graph. This graph also shows that we need to meet credit requirements in order to boost consumption, productivity, etc. But if the crisis lasts too long or if it lingers, these measures may become less effective. The market might be affected. We might see some over leveraging, and therefore we might also see some defaults and drops in profitability, and bank insolvency may also be impaired or may have less leeway in order to keep credit active or up and running. Therefore, these are the key challenges as this crisis lingers. So this is what I wanted to share with you during this first round. Thank you so much, Solange. Let's move on with the experience in Colombia. Daniel, you have the floor, please. Hello, Adriana. First off, I would like to thank CAF and FLAR for kindly inviting me to join this panel with other colleagues from the region. I'm also happy to greet Professor Jose Dario Uribe, who was my boss at Banco de la República and my professor as well. So let us talk about financial stability in times of coronavirus in the case of Colombia. In the Colombian context, just like in Chile and in the remaining countries, the fallout of the pandemic has been pretty evident. As Solange said, the outcomes or the consequences of the pandemic coincided with the social turmoils that transpired in Chile last year. In the case of Colombia, it happened in parallel with the drop in oil prices. So it was sort of the perfect storm. And taking into account financial stability from an analytical perspective, the effects are pretty evident both in the credit and in the commercial markets, in the commercial papers market. So the crisis had or took a hit on the financial markets, as you can see on these graphs. So this shows volatility, public indebtedness, and when the crisis broke out, or when social uncertainty began with the lockdown, volatility in the markets overshot, reaching levels that were unprecedented, as you can see on the graph on the right-hand side. Now, in the credit market, you can see on the left-hand side credit outflows from banks injected into the economy of the financial sector. So here we see different bars classified according to different credit categories. In March 2020, there was a reduction in outflows in the case of consumer loans and microcredits. In that case, they virtually disappeared. Yellow and blue show a significant drop in March and April 2020. Here we are talking about commercial portfolios. Companies were able to access some credit lines, but this component came to a halt over time, or it slowed down. Just recently, in the case of volatility, conditional volatility, there was a rise, but then it was once again another drop, and now volatility is already at pre-pandemic levels. Even though the average of the post-pandemic outflows is significantly lower compared to the pre-pandemic levels, we see some rally in terms of outflows, a gradual rally of outflows. And this is closely tied to a timely policy response that has no immediate precedents in the country, because the institutions in charge of the financial system acted in a coordinated manner in order to address that situation. On the left-hand side, you can see what the national government of Colombia did. It extended public guarantees considerably, as well as the size of the credits that the national fund could provide. We are talking about 27 billion US dollars all in all. But first, there was a relatively low use of these credits, but then this has been picking up a little bit. This is related to some uncertainty caused by the pandemic. So as things began to be solved to some degree, that all the public credit guarantees quota was gradually used. Measures were implemented by the financial superintendents with regards to credit. For example, banks provided some relief within a supervisory framework that allowed for that. So in Colombia, this relief reached nearly half of the credits injected into the economy, which was quite a significant number. And then there was some temporary relief projects, and other mechanisms were implemented in order to provide permanent solutions to institutions. For example, by providing them with new terms and conditions for their current credits. And even though the par credits are relatively small for the time being, they are expected to continue to grow. The central bank, of course, played a very important role. Several measures have been taken. For example, in terms of exchange rate hedging forwards. Also, the Bank of the Republic expanded the number of purchase transactions significantly, with extending the maturity terms, the amounts, etc., while reducing interest rates, as well as swaps, something that I will mention afterwards during this second round. And it also purchased assets of both public and private securities. So all this huge response underlines the fact that financial markets volatility dropped. Now there is much more market trust, but it also laid the groundwork in order to support the recovery of the outflows of credits. So this is something that we already begin to see. Looking forward, there's a lot of uncertainty as for the demand for credit. We don't know exactly what will happen to the economy. That might put pressure on the credit demand, but that's something that will be solved in the long haul. However, the current policies have provided the terms or the conditions so that the offering of credit does not represent a problem, at least for the time being. Afterwards, we will draw some conclusions around this. So I would like to close here for the time being, Adriana. Now I would like to turn to my colleagues, and then I will touch upon other topics when I take the floor again. Thank you very much. The measures taken by the central banks of both Chile and Colombia played a key role for the payment chain not to be interrupted and in order to alleviate the effects of the crisis. Let us now turn to Martin from Mexico, please. Martin, I believe that you're muted. Good morning, Adriana. Well, first of all, I would like to thank the organizers and all those who are attending this webinar this afternoon. If you agree, I will now start displaying my presentation on the screen. Well, I would like to start by stating that the pandemic triggered off three shocks, one in terms of supply, demand, and in terms of the financial markets, which in turn affected different macro financial variables. Therefore, starting with the supply shock, the lockdown made the production of certain goods and services very difficult. Here we are talking about productive processes, causing some alterations in the supply chain, causing some bearish markets and some pressure on inflation, plus unemployment, the drop in employment, as well as the drop in trust and the cutting of savings, plus a slowdown of global trade. All these also impacted supply, causing some pressure on the economy, as well as some pressure on pricing. So how did these major macroeconomic variables performed? In terms of the economy and inflation, we can see that the performance was not very positive in the country compared to other emerging markets. Why is this important? Well, because this led to increased tension in terms of public policies and caused authorities to face bigger challenges. As for the financial shock or the shock on the financial markets, there was a reduction in the risk appetite, causing some capital outflows, which had an impact on these macro-financial variables through two channels. First of all, it caused some effects on the long-term rates in the sovereign debt markets, among other markets, as well as a drop in the price of financial assets, as well as in the foreign exchange rate. With regards to amounts, the amounts of outflows had to do with some external refinancing, so it could have caused some difficulties to local banks in order to obtain financing from foreign banks, causing some restrictions or causing or providing difficult conditions for the domestic market. So this is a channel that is very powerful in Mexico, and it has been so for the past decade. So through the supply of credits, capital flows are strongly correlated to what happens with local financing. At the bottom, we can see the pricing channel with significant rises in terms of the risk premiums that afterwards recovered to more normal levels, but not yet pre-pandemic levels. So we have different channels that work through pricing and amounts. So the two major macroeconomic variables that should be pointed out are inflation and the economic activity. They cause some non-payment or default risks, especially when it causing some challenges, especially in the case of the housing and consumption segments, whereas in the case of companies, it causes some problems with regards to their backlog or portfolios. As for the financial shock on the financial market, rates and the drop of financial assets caused a reduction of banks' capacity to provide loans, and households and companies could not obtain loans, causing some liquidity and default problems. With regards to amounts, there was pent-up difficulties, and this could have caused some liquidity problems with some potential consequences as for the restrictions on the supply of credits in the market that could have caused increased default issues for both households and corporates. So all this has different effects on various variables, and in the case of Mexico particularly, three key measures were implemented. First, a monetary policy, then extraordinary policies in order to tackle financial markets and the financial system more directly, and then fiscal policies. Starting with the monetary policy, as I mentioned before, Mexico performed differently or not so positively compared to other EMs, and therefore that caused the central bank to face huge challenges, having to outweigh the impact of inflation, the flows of capital, etc., and also the impact on the financial system due to the effects on liquidity and defaults. In March, the central bank decided to accelerate the cycle that it had started 2 months before, and therefore by striking a balance in order to address inflation, credit, etc., it was able to keep financial stability. As for the extraordinary measures that were taken and that had an impact on the financial markets, well, there was a set of measures in order to provide liquidity to financial intermediaries in the repos market. This is a short-term market, and another measure was to extend the range of assets that can be used as collaterals, including government bonds and corporate debt. Therefore, it was possible to fulfill a dual goal to provide liquidity while stabilizing long-term rates in the sovereign debt and corporate debt markets. Besides, a set of measures were also taken in order to provide some relief in terms of, or to ease up regulatory requirements, and that were intended to provide incentives for banks to reschedule households' credits in order to provide some relief also on defaults and non-payments. And then the fiscal policies. In broad terms, these policies made it possible to provide increased access to credit to households and corporates that did not have any access to credit at all, as well as some tax exemptions that made it possible to repay debts, mitigating some potential liquidity issues in households and corporates. And the Development Bank promoted also the credit restructuring, also providing guarantees under more flexible conditions. And that's all. And thank you very much for your attention. Thank you very much. No doubt. Mexico faced many challenges, perhaps more than other countries, for example, inflation rates, as well as product gaps, the COVID-19 shocks, and the rate situation. Now we give the floor to Elias so he can share his experience with us. Elias, you have the floor. Can you hear me? Can you all hear me? Well, good afternoon, everybody. Thank you very much for allowing me to be on the panel. Let me touch upon the Peruvian case. We have already observed that Peru was in fact one of the countries hit the hardest in in terms of economic activity. Basically, the COVID-19 shock had impact in terms of rate volatility. As you can see on the left-hand side, exchange rate volatility. A number of measures were implemented. The central bank played a key role in this respect. We already had a lot of experience in this respect. And thirdly, another focal point was the economic activity. By contrast with other countries, in fact, in Peru, there was a lower GDP shrinkage. In Peru, however, we did have a big contraction. We should analyze this, however, given it the right scope. In Peru, however, more or stricter lockdown measures were taken. We're talking about March the 15th, 2020, when the lockdown was decreed. So we saw that the number of cases was going up, so measures were taken right away. Authorities decided to implement a very strict lockdown. By contrast with Spain, for instance, where authorities allowed for certain activities to keep on running. In Peru, by contrast, those very few specific activities remained active. So that just to show you the scope of the lockdown and the restrictions imposed to social mobility. Therefore, that led to a higher GDP contraction in the amount of 30% in Q2 2020. In the face of that situation, we were impacted by different shocks in different sectors. Authorities and the central bank therefore adopted a number of measures. Here we're talking about tax authorities on the one hand, we were able to inject liquidity into the financial system, and in turn the financial system allowed for the granting of credits to corporates. This program has three characteristics: competitive auctions, in the sense that the bank takes a look at the program only if it can provide the lowest interest rates to borrowers or to clients. It's mainly targeted at corporates in this case because there was a high risk of interruption of the payment chain, and here the purpose was to regain the work capital due to restrictions and also due to the potential effects of a drop in sales. Then the state guarantee. Here we're talking about 80% being aimed at large companies and 98% to smaller companies such as SMEs, micro companies rather, or companies with an indebtedness level of about $5,000, and other companies that hold debts in the amount of up to $90,000. Afterwards, we will take a look at numbers and results. The government also implemented a social transfer policy by issuing bonds. This is something that we also saw in other countries like the US. Also some tax relief to companies by providing payment extensions as far as the social lockdown remained in place. The central bank therefore tried to reduce the volatility of financial markets, and therefore they implemented some liquidity in an unprecedented manner. And I would like to underscore the repo portfolios, the credit portfolios, an idea that came up in 2008 amid the global financial crisis. This means that banks providing loans to companies, these loans are backed up by promissory notes or commercial papers. So these companies can access credits through these state-secured loans. Then we have repo transactions with rescheduling. So this is another central bank program where financial institutions can access liquidity at a certain 1.5% liquidity rate only if they lower interest rates to clients by 1/5 or at 200 basis points, whichever the lower. So since late March and early April, the benchmark interest rate of the central bank was slashed down to the point of other developed markets. We're talking of a drop of 2.25 down to 0.25. This is the rate applied in Australia and other leading economies that have applied this kind of inflation rating scheme. And in closing, we also have some rescheduling allowed by the superintendents of bank and insurance, also the counter-cyclical program. This allowed for half a point of risk-weighted assets, and then also the capitalization of proceeds for all financial institutions. So banks were able to capitalize twice as much as what they used to capitalize in previous periods. Then we have the so-called Reactiva Peru program. This is an 8 percentage points over GDP. And this program also allowed for the injection of credits targeted at companies that you can see on the left-hand side in the red line. So these loans were mainly targeted at medium-sized and micro companies, 98% of companies mainly. So these growth levels were not observed since 2008 when the Peruvian GDP was growing at a rate of 9%. So during the social lockdown, these companies were highly likely to have no access to liquidity and might have actually gone under massively. This chart at the bottom shows some statistics as for reschedulings. In Peru, this was 30%, approximately 30% of all of the system credits were rescheduled, and reschedulings affected mainly households, like in other affected countries, and also micro and small-sized companies benefited from this loan rescheduling. And in closing, let us talk about the effects, the consequences of the health crisis on the financial system. What did banks do in the face of this situation? Since March, we could say, they have been increasing voluntary provisions. We are facing GDP contraction with plenty of uncertainty. So in Peru, banks took a prudent approach and they built up provisions in the event of some forthcoming impairments. On the left-hand side, you can see total provisions. This is depicted in the red bars, and this is twice the amount of provisions allocated in previous years, mainly before 2019. The other two graphs show specific provisions given the portfolio true impairments, and then we see voluntary provisions on the right-hand side. That is how many provisions you should be allocated in order to face potential portfolio impairments. The two graphs at the bottom show the increase of defaults or delinquency. The default ratio, if we remove the Reactiva program that accounts for 20% of total credits, we see an increase here, a gradual increase though. So Reactiva and the rescheduling programs allow or prevented a high increase in non-performing loans. Then we see a lower financial margin here. We will see how this happened. And also The provisions that were allocated taking a prudent approach also had an impact on profitability. In the third round, we will talk about provisions and what we expect going forward. For the time being, thank you for your attention. Thank you, Elias. It's been very interesting. I believe that we can draw the following conclusions about this first round. I believe that the extraordinary measures taken by monetary and fiscal authorities, such as cutting rates, liquidity injections, credit outflows, and guarantees, allowed not only for a volatility reduction, but also it allowed to guarantee that there was no interruption in the payment chain, while allowing for a pickup in activity as well as loans. Afterwards, Elias will explain how loans in Peru were mainly targeted at this goal. Banks, however, also took a prudent approach as they increased their provisions. We now come to some questions that are part of the second round. Several analysts claim that so far we have not yet seen the true effects of COVID on the balance sheets of the financial system and also in terms of risk. This is because guarantees have actually contained defaults or non-payments. But once this is over, we will start to see the true effects of the pandemic on the balance sheets of the financial system. The questions, therefore, are the following for each of the panelists. The first question is, what could happen in the short term in terms of the balance sheets of the private stakeholders in the financial system, and also in the non-financial sector that perhaps have fewer opportunities, and how can we distinguish when or how can we spot the solvency or liquidity problems that might arise at some point down the road, and also the impact of the fiscal and monetary measures with regards to financial stability. How much risk this might entail for falling markets. So let us start with Mexico. Martin, you have the floor. Well, let me go to the slide that answers this question. First, I will talk about liquidity, following with delinquency, and then the interaction between the different types of policies. Starting with liquidity, I should say that the Mexican financial system was on the upside, mainly due to the implementation of the liquidity hedging ratios in 2015. However, despite this upside position, in March, as a result of the pandemic, there was an increase in liquidity risks, mainly with regards to the largest financial intermediaries. This was afterwards offset. It was reversed thanks to increased liquid reserves in banks. Now, in line with what Adriana said, talking about the private sector, it's true that perhaps we have not yet witnessed the true overall impact of the dropping of activity on delinquency. So the non-adjusted delinquency ratios have not been growing significantly. What's more, they have been coming down in the past months. But if we try to explain this, or the reasons why this has happened, usually this is due to the strategic behavior of banks. And this can be observed when we compare the delinquency ratios on the left-hand side, or the IMF ORs with the adjusted indexes or ratios on the right-hand side. So there was a transition with regards to the current portfolio towards the so-called punishments and haircuts. So the fact, well, this was the reason why we have not yet seen a big impact on delinquency, because of the strategic behavior of banks that have been cleaning up their balance sheets. Another reason might be related to the implementation of special accounting criteria, or CCE, that made it possible to partially or fully defer the payment of certain credits. Noteworthy is that these credits could be deferred for 4 to 6 months, and now we will start to see what happens with the real situation of these loans. And another reason why we haven't seen a big impact on delinquency has to do not only with accounting reasons, but also with economic performance issues. There were some significant drops in economic activity. This also had an impact on delinquency. So by way of conclusions, I would say that we have not yet seen the final outcomes, because the Mexican economy was in quite a robust position when the crisis started, and that therefore enabled us not to be stricken by significant effects in the financial system. Now, looking forward, when it comes to the interaction of different economic policies, the key message here is that we can't understand the financial system in an inflated manner. Actually, this is a component of a much larger system, and we have to include all the interactions that it has with the real system, with the real economy and the financial market. So we can't think that policies, any policies that are taken are regulatory policies looking forward, not even policies that are only concerned with the financial systems. So going back to the interaction between the different policies, I should say that the goal of reducing the significant increase of the risk premiums would have not been possible only through a monetary policy, because the monetary policy per se does not have the capacity to trigger off such an effect. However, these extraordinary measures, both regulatory and those concerning the financial markets, could have been perhaps more efficient in a more liquid environment. I should say that the monetary and regulatory policies are complementary to each other, and they do not replace each other, but neither the extraordinary policies nor the monetary policies suffice in order to reactivate the economy. In this case, the key component is the fiscal policy, both to relaunch the economy or to provide more confidence for the monetary policy to be more effective, and also in order to tackle more specific issues concerned with some specific borrowers or credit beneficiaries. And that's all. Thank you very much, Martin. It's been very interesting, especially because it's true that there was no single policy that actually allowed for mitigating the impact of this crisis, but rather several policies that were put in place. Solange, could you like to share the experience of Chile? Yes, I have a couple of slides that I would like to share with you. There you go. In the case of Chile, as we have observed in several presentations, this had a strong impact on the non-financial system, that is to say corporations and households. Now, Going forward, we run risk exercises to see what is going to happen with the financial situation of companies in the current scenario. All the measures that we have discussed and which have made it possible to reschedule debt repayment and credit access through state guaranteed programs and through liquidity given by central banks have made it possible to redress liquidity issues. On the left-hand side, you can see the cash flow months that companies might not have available if they didn't have any income or if their income was slashed by 50%. So this graph shows that companies would be able to be without cash for 10 months in a go and without reporting any income. They would be able to survive all the way through in such a situation. So when we obtained the financial stability report published in May, this graph showed a much more complex situation. These bars, the period of 0 to 3 months, we can see the companies that could only have liquidity for 3 to 6 months, that was less than 20% of companies. In May, when all these measures were being implemented for companies to access liquidity, this percentage rose to over 50%. So more than 50% of companies would have been able to only cover 6 months of liquidity. So thanks to all the liquidity measures that were taken, this was addressed. Now, no doubt, this has many positive effects together with the monetary policies providing low rates for several months in a row, and also thanks to the fiscal policies providing access to state guaranteed credits. Now, when we analyze solvency of companies going forward, we forecast losses of profitability or interest rate hedging, we see that the situation becomes more complex and if activity does not pick up over time. With regards to the impact on the banking system, like we mentioned before, delinquency behaved quite positively. Consumption delinquency, as you can see in the graph in the middle, came down, the same as housing loan delinquency and retail delinquency. In turn, provisions also went up similarly to other countries, as we have already seen. Therefore, this is how the banking sector behaved, showing that rescheduling and all the measures that have been put in place have made it possible to keep delinquency under control, but that doesn't mean that in the future payments will be honored. In fact, we are talking about risks that could actually surface out in the forthcoming months. When taking into account the banking situation right now, according to some latest reports, the banking system has been able to withstand the drops that have occurred. The banking sector has behaved or performed quite well, keeping at regulatory levels, but less than in previous periods, as you can see on the right-hand side. Here, the capital leeway of banks is a little bit lower compared to historical values, but we are talking about a significant crisis where the banking system has been able to withstand the situation. Now, we will have to see whether the banking system will be able to withstand credit requirements in the future. All these measures, once again, has enabled banks to provide, therefore, credits, and this coupled with an expansive fiscal policy and the monetary policies that have been put in place, and all this has allowed also for reschedulings, and this has been critical in order to avoid massive delinquency across corporations or liquidity crises that always cause any economic recovery to be more difficult. Thank you, Solange. So in Chile, the financial system was strong enough to withstand the situation, but in the future, problems might arise if the crisis lingers too long. And that's something that we have to wait and see, because a second wave might cause trouble to institutions. Let's now move to Peru. Elias, you have the floor. Okay, thank you, Adriana. Here I would like to talk about the effects of the measures taken. The IMF applies this methodology that associates financial and macroeconomic variables. It's called growth at risk. Here we see on top, the green line shows what could have happened if the program Reactiva Peru had not been put in place. So we have the scenarios with Reactiva and without the Reactiva program. In the second case, and with no liquidity injection by the central bank, there could have been a huge number of companies going bankrupt, causing also unemployment to skyrocket, causing also high delinquency rates in the system. That would have been the effect after March. In March, we forecasted a significant contraction, something that we didn't see in the past 100 years. So that shows that the Q2 contraction is equivalent to what happened in 1930 and 1931 when the Big Depression took place. So this shows how much we have been able to reduce this worst case scenario compared to the situation without the Reactiva program. At the bottom, we show what is happening right now. Here we see a rally in terms of outflows by companies and households. For example, in the case of mortgage loans that are collateralized, this shows banks' aversion to providing loans without guarantees. Consumption is also picking up as a result of the economy reopening. We're going through the third phase, and now service companies and entertainment companies are also opening up and resuming their activity. Then we see interest rate behaviors affecting micro companies. Here there was a significant drop of interest rates. And even though Reactiva is going through the last phase, we are talking about 55 billion soles already. That is the cap. The cap, it's nearing the cap, which amounts to 60 billion. Right now, this is 1/3 compared to the pre-pandemic levels, and the same applies to SMEs. So here we have two key messages. Reactiva has allowed for a reduction of the probability of defaults by companies and also households, and it has also reduced the financial burden because it has cut interest rates, therefore fostering the monetary policy. At the time, there was a very low benchmark rate standing at 0.25 compared to, well, similarly to other developed countries. So this has had internal positive effects in domestic demand and also positive effect on employment and above all financial stability. And in the third round, we will see what we should expect for next year. Thank you very much, Elias. Let us now give the floor to Daniel so he can talk about their experience in Colombia in this regard. Well, the Colombian experience is similar to that of other countries. Now, going back to the question as to what is going to happen to balance sheets in the real economy, in the non-financial system, I'm sure that balance sheets will be markedly impaired as a result of the pandemic. you said, Adriana, this information is not obtained with the quality one should expect. But according to our estimates, the number of companies that are in a fragile situation, in the sense that their indicators surpass certain estimates that we have made in the risk department, we see that there is a percentage of companies that have become insolvent. The financial burden of households has also gone up. That is to say, the percentage of outflows compared to their income has also gone up significantly due to a significant decline in households' income. This will be one of the effects. In Colombia, this will be perhaps the worst recession in history. So no doubt, if we consider only our historical experience, recession plus impaired balance sheets in the real economy, this will not be an exception, and credit risk will certainly be materialized to a significant extent. What has happened so far? Well, we will talk about vulnerabilities in the third round, but now I would like to talk about the increase of the past due portfolios that are more than 1 month in arrears. When the pandemic started out, past due portfolios declined very significantly in the case of consumption and households. But we are in a recession and past due portfolios came down, but that was thanks to the measures taken by the financial superintendents. In Colombia, the relief programs were applied to some portfolios that were between 0 to 60 days in arrears, so past due, and if a grace period was given, or if a forbearance period was given, the clock was reset to 0. Therefore, past due portfolios came down, but as those grace periods came to an end, the past due portfolios went up once again, and according to our estimates, going forward, past due portfolios will continue to climb even more. On the right-hand side, we see another chart that I would like to discuss during the third round. I would like to go back to the topic that you introduced, and that's the coordination between monetary and fiscal policies. I fully agree with the comments made by Martin with regards to how these policies complement each other, how monetary policies have natural limits in this shock, and the fiscal policy therefore has to step in. So I agree with that approach. I would also like to talk about the coordination of the monetary and the fiscal policy in the case of Colombia. In Colombia, there was a reduction. There are 3 percentages. For 11, we went to 358, so there was a significant reduction by 200 basis points in terms of swaps in order to release liquidity into the economy. This has also been very interesting because at the same time the national administration allowed for solidarity bonds. This was a compelling bond for the same amount that had been released, for a very similar amount. So here an engineering exercise was performed by releasing liquidity, reducing therefore this value, and this was done through what's called a compelling investment. Now all the securities issued by the government, or the bonds that banks purchase, all those bonds require liquidity. Therefore, the Bank of the Republic also allowed for the issuance of these bonds, and all those transactions were very important. So this was a liquidity release exercise, showing how important the coordination of policies is. Then the government expanded state guaranteed credits, and as Elias said, in Colombia, repos were also implemented with promissory notes or commercial papers. That was very important, and in our case, it was used in order to allow for repos. So as the government changed the terms and conditions, increasing the quotas, this is coordinated by the central bank. All these portfolio securities that were used in these repo transactions were used so that the stimulus was given by guarantees without being affected by the monetary policy. And that was critical, taking into account that in the specific case of Colombia, the Bank of the Republic understood its legal mandate. And as a result of such an interpretation, it does not carry out any conditional repos, as it's the case of Chile and Peru, where banks can grant more loans by bringing their rates down. Actually, this is not possible because of their legal mandate. So I just also wanted to mention that apart from showing the importance of the coordination of both policies, the design and engineering of transactions shows that coordination is critical. And unfortunately, in this particular case, at least in Colombia, this coordination flowed smoothly with regards to the response given by authorities to the current crisis. Thank you very much, Daniel. I believe that coordination and the implementation of these policies has been critical in order to secure that the payment systems continue to flow smoothly, the same as credits. Banks stood at a relatively robust position, as in the case of Chile, where there's still some resilience left, but perhaps the main risk may lie in the fact that this crisis may linger longer than expected. So now I'd like to close, and I'd like to turn back to Carlos so that he can start with the last round. Thank you very much, Adriana. So let us now start with the last round. Based on the previous presentations, it's been made clear that the scope of the measures taken has been very important, as well as the complexity that exists with regards to the interaction between fiscal and monetary policy. Looking forward, the crisis effects could be very sharp and long-lasting. And as mentioned by the different panelists like Martin, we have not yet seen the overall effects. For the time being, the measures that have been adopted have allowed for keeping the financial stability of the economies. Now, I would like to take a look at the future. So based on your experience at your respective central banks, and as for the risks of instability and the challenges posed by this scenario, we know that there are many challenges given the fact that recovery is uncertain. Which are the main risks and challenges that you would point to that authorities will face in order to safeguard financial stability in our economies? I would like to start with Elias so that he can touch upon this aspect from the Peruvian perspective. Thank you very much, Carlos. Well, along the lines of the previous slides, here I can show the stress tests run in Peru to prove the quality of the portfolios, the delinquency ratio, and the global capital ratio. Well, here we expected a GDP shrinkage between -10 and -12 after the latest measures put in place, and some rally next year coming from an increase in the price of raw materials. Right now, they stand at an attractive price of 350. We also show investments picking up, the same as employment. So we expect sort of a V-shaped recovery. Therefore, when talking about delinquency, the opposite would apply. Delinquency will grow gradually. We have some expected losses. They are not non-expected losses, or we do not longer have the uncertainty that we had at the inception of the lockdown. We believe that based on our estimates, delinquency will stand at 10%, and this may slow down gradually as the economic activity picks up. The highlight here is that Peru has built up significant capital ratios. We implemented Basel III in 2017, and as a result, the financial system in Peru now has better quality capital and additional buffers in order to face extreme situations, while building up provisions, pro-cyclical provisions. We began doing this in the past. All these buffers provide the leeway the system needs in order to absorb any potential losses that might occur in the future. Plus, the national administration's measures that have been put in place, and also the Reactiva program we have already described. For all these reasons, we expect a better scenario next year. Delinquency will continue to grow, but it won't be so severe. So that's more or less, well, my closing conclusion. Thank you, Martin. So the starting point of our financial system in the particular case of Peru is quite positive, because you're starting out with good solvency levels and with a good buffer. Now I would like to turn to Martin so he can share the Mexican experience with us with regards to future risks to financial stability. Martin, you have the floor. Okay, let me go back to what Carlos said. Let me pick up where he left off. I believe that Mexico was in a similar situation with very high capitalization levels, broad liquidity, and low delinquency or default levels. So taking into account the starting point and the effects the pandemic has already had, and also taking into account other challenges that are yet to come, let us start with the effects that the pandemic has already had. I believe that challenges have to do with safeguarding order in financial markets, the flow of credits, also containing the needs of liquidity of financial institutions, households, and corporates, and also promoting an adequate risk management and operational continuity. Also, in connection with my previous comments during round 2, as for the interaction between the real economy, the financial system, and the financial markets, I believe that many of these challenges have to do with mitigating the potential impact of the negative effects on the economic activity and employment. Looking forward, there are risks which are mainly tied to the evolution of the pandemic, or how it will eventually play out, and also the development of new vaccines. In the particular case of Mexico, we have to take into account what happens with fiscal support, as it's the case in more advanced economies. In EMs, however, we might see increased volatility in international markets, and therefore a recomposition of flows towards lower risk assets, as well as a slower national economy recovery. To me, this last point, which is cross-cutting in all emerging markets, has some peculiarities in the case of Mexico, because Mexico or the Mexican economy is integrated into value chains that are closely tied to those of the United States and also international trade. So that's perhaps one of the last risks that is also tied to a third risk, which has to do with the possibility of the U.S. recovery being slower than expected, causing therefore a delay in the Mexican activity pickup. And a fourth risk, which is also specific to Mexico, has to do with the current situation of the number one oil company in the country that also poses a risk. This is not a subjective assessment as to the probability of occurrence of these events. I'm just putting this forward as a future risk regardless of its likelihood. So the sovereign rating might be adjusted the same as Pemex rating might be adjusting, causing some portfolio readjustments consequently. And that's all on my side. Thank you very much. Thank you, Martin. No doubt external components are critical to our economies, and capital risk, volatility, and capital flows are all determinant factors. Looking forward. Now I would like to give the floor to Daniel so that he can provide his view from the perspective of the Colombian economy. A few weeks ago, you had one speaker who spoke about an invisible financial crisis. That's quite a strong statement. I do not necessarily agree, however, with such a statement. However, she said, or there were actually two concepts underlying her thoughts. She said that the effects of the crisis are still to be unfolded. And then she said something that is critical and that we should bear in mind. She said that in this crisis, or that this is a temporary crisis, no doubt, the virus will disappear sooner or later, there will be a vaccine, but the scars of this crisis will be permanent. And that should be taken into account. Evidence about past recessions show that permanent recessions imply that in general economies and the economies in our region will become poor permanently. There will be a drop in income and therefore a reduction of the economies, the financial systems, the size of credit, and the transition. And the main vulnerability that we are facing with regards to financial stability is how we shift from the current situation to one situation where the effects of the crisis will be more permanent. In this transition process, and in transitioning towards that scenario, let me advertise the report that we published 2 weeks ago. That's available to all of you if you're interested. We said that there's plenty of uncertainty. There's uncertainty around the present times, not only about the future. Yes, of course, we don't know how we will recover, whether there will be second waves or another lockdown or a quarantine, but there's another uncertainty about the present. The effects of the crisis are still to unfold, even the real scope of the crisis. This graph on the right-hand side shows that. It depicts what Carmen mentioned with regards to household portfolios. Here you can see some the gross portfolio vis-a-vis the past due portfolio. So let's take a look at the pink dots that we see a dotted line, the orange dotted line, the higher unemployment is, the higher this index. This is a nonlinear relationship, so the higher unemployment, the higher the index of past due portfolios. The yellow dots, on the other hand, between April and September, are very far away from the other dotted line. This is because the past due portfolio ratio was quite low due to the mitigation measures taken by authorities in Colombia. So the question I have going forward, and this is another way to analyze vulnerability, is the following. I don't know whether my cursor is working properly or not, but what I can say is that these yellow dots, well, unemployment went up in April up to 20%, and it has shifted towards the left, and now we are standing right here. In September, we reported this dot. Therefore, the question is, how fast are we going to go back to the dotted line? Are we going to go back quickly without the past due portfolio to be affected, or will it actually be going up? From the perspective of the Bank of the Republic, it's likely that this unemployment rate will stay at 14% for a long time. So it will go back to this line at some point, but in a more vertical trajectory. So the past due portfolio index might go up. If today we are talking about below 6%, we might expect up to 15% if we remain at this unemployment rate. Chances are that it will follow a north-west trajectory, therefore reaching 11 or 10%. How will the financial system absorb past due portfolios during this transition process? Well, that's the key question. Will there be more provisions? Well, yes, banks have allocated more provisions, but there's another aspect which is also important. As Solange mentioned before, the profitability of Colombian banks, and this is something that already happened before the pandemic, came down quite significantly. So we started the year with less resilience, profitability by banks, and with an economy that will require more credits in order to be able to recover next year. How will the financial system address that problem? How much will credit risk be, or to which extent it will be materialized? What about loan requirements? So we have sort of a cocktail with plenty of vulnerabilities that, well, we have to see how they play out next year, mainly in connection with the uncertainty as to how the economy will evolve based on these estimates. Thank you very much, Daniel. No doubt uncertainty is a critical component to this transition towards economic recovery, and it would certainly take a hit on financial systems. Finally, we would like to give the floor to Solange so she can throw some light at what she thinks is going to happen from the Chilean economic perspective. Yes, we can hear you, Solange. We're talking about uncertainty. That's something that I wanted to touch upon in closing. I believe that this is the big question we have looking forward, because this is a very complex scenario. It's very difficult to predict how long the health crisis will last, how deep the scars will be in the economy. We don't have all the data in order to actually provide an accurate diagnostics. As the other panelists said, we have a lot of uncertainty. This financial report published 1 week ago shows this graph with some uncertainty indicators. This is the local stress index showing volatility. Even though financial conditions have been quite favorable, we should say the volatility is high. And this is shown in our foreign exchange rate compared to historical values. On the right-hand side, you see the perception and uncertainty index. Here we show the cases of the US, Chile, and the UK. Here you can see a peak during the Brexit affecting the UK. And now, in the case of Chile, we also see these spikes as a result of the social crisis. We have kept these uncertainty indicators that came in through tweets. So we have come to the conclusion that there's a lot of uncertainty going forward. Jose, I believe that this is perhaps one of the most complex topics to be dealt with, trying to understand what we should expect in the forthcoming months, as several elements provide us with a diagnostics as to what is going to happen in the financial system that provide us with some peace of mind, but there's also some uncertainty as to the future scenario. Now specifically, we believe that refinancing requirements for the next months might be critical. Regardless of credit growth per se, in Chile we focused on the early months of the crisis on increasing the number of credits. The Central Bank of Chile took measures in that direction, the same as FOGAPE. As I showed in the previous slides, everything was concerned with increasing work capital in order to provide financing, and so that companies could restructure their debt, making companies more viable in order to honor their payment obligations, matching that at the same rate of the economic recovery. But we don't know exactly when that or how that recovery will take place, and perhaps companies will have to survive longer with lower revenue. So we believe that keeping favorable financial conditions is very important. The monetary policy or an expansive monetary policy was announced this week for a longer period with proper monitoring and support to financial institutions. All these measures are critical because they can provide some relief. And as Daniel said, how do we move from the current situation towards economic recovery? We believe that how we address that will be critical. We don't know, however, how that recovery will take place or the rate at which the economy will recover. That's all on my side. Thank you very much, Solange. No doubt the issue of uncertainty is critical. We understand that the social turmoil in Chile is not the only situation of this kind in the region, but it adds up to the uncertain scenario we are living through in the region. Thank you very much for your participation, and thank you to the rest of the participants. I see that it's quite clear that we are living in a highly financial fragile scenario, both in the public and the private sector. And no doubt this uncertainty prevents us from establishing a clear-cut recovery trajectory. So we have low interest rates internationally and locally. They might remain low for a long time, and that might reactivate risk. Well, actually, there are so many things that we could continue talking about, but we are right over time. So once again, thank you very much for your participation, because this panel has been highly useful. Thank you also to all attendees, and we hope that you will join us in future events. It has been a very fruitful dialogue. Thank you to all of our audience, and we're also thankful to CAF for sponsoring this webinar together with FLAR. So keep safe and have a nice rest of the week, and Merry Christmas. Thank you very much. Bye-bye. Thank you. Thank you. Thank you, Danielle. Thank you, Elias, for an excellent webinar.